Have you ever wondered how credit card companies make money when you carry a balance? Let us break down how interest charges actually work. The annual percentage rate, or APRA, is the yearly cost you pay for borrowing money on your credit card. Banks do not charge interest on the whole year at once. They break your APRA into a daily rate applied to your average balance. The simplest way to avoid paying interest is by paying your full statement balance before the monthly due date every single cycle. The grace period is the window between your purchase and the due date, where you pay zero interest if you pay in full. When you only pay the minimum, interest compounds, meaning you pay interest on your interest, causing debt to grow significantly over time. The golden rule of credit cards is simple. If you cannot afford to pay for it today, interest will make it much more expensive tomorrow. Understanding your credit card terms is the first step toward better financial health. Thanks for watching and stay informed.